Hello and welcome to an exclusive interview with Pronab Sen, Country Director for the India Program at the International Growth Center. Welcome, Mr. Sen. The RBI is taking a series of steps to attract foreign flows and protect the rupee amid depleting Forex reserves. It is acting across three channels, if I'm not mistaken. The banking deposit, the FPI debt, and the ECB. Will these measures be enough?
These may not, in fact, have been necessary. But I think what RBI is signaling is that the turmoil in the world economy may last longer than we expect. And I think what they're doing is building the groundwork for the future. So, one of the things that in India we are, in a sense, fortunate to have is that the government itself does not borrow from the global market, except from the multilateral institutions. And because of that, almost all our external debt is private debt. So the real issue that's facing the government is that if the private transactions tend to go against India, we must build the groundwork to either prevent it from happening, which is some of the steps they've taken, or if one part of our flows go out, there would be other flows that would come in and compensate. So they're essentially creating that framework. And I think that's not a bad thing to do given the uncertainties that we are facing.
Of the $621 billion of external debt, over 40% is due for repayment in next 9 months. This will be equivalent to about 44% of the country's Forex reserves. First, is this bunching up of repayments par for the course? If not, how will this play out going forward?
No, it is an unusual situation. It is certainly not par for the course. Our repayment liabilities usually are spread out a lot better. And I suspect the reason it is happening is that, when the global economy went into this, this is post-2008, went into essentially a huge amount of monetary easing and global interest rates crashed, I think a lot of Indian corporates actually did a huge amount of external commercial borrowings. And since all of these were bunched around a fairly short period of time, the repayment is also getting bunched. Once the RBI actually starts getting serious about inflation targeting now, a lot of these pressures will go away. The pressures will then come much more on the growth side than on either the inflation or the Forex.
Current account deficit is seen doubling to 3% of GDP this year, and the rupee hitting 82 a dollar by the third quarter before recovering. Given these, how has the RBI fared in managing the rupee's fall, and are its CAD measures adequate?
Now, the rupee has certainly depreciated against the dollar, and it's depreciated quite substantially by almost 9-10%. But if you look at what's happening globally, against the basket of currencies, we haven't depreciated, right? Now, and the reason we haven't had to do it is because exports have remained strong. But if there is a coordinated monetary tightening around the world, and if there is recession in some of our major importing countries, which seems to be quite likely as of now, then of course things change. Then we'll have to be far more aggressive about depreciating the rupee. So if people are getting worried about the rupee now, they could be in for a rude shock, not very distant future.
Do you get the sense that authorities like the RBI are behind the curve in tackling economic headwinds and are playing catch up?
The RBI waited too late to express concern. I mean, the kind of forward projections that they had on inflation were extremely low. And then all of a sudden, you have this off-cycle rate hike, and quite a substantial rate hike, which seems to give the impression that the RBI was taken by surprise. Now, that's not good for the RBI's image. And that worries me because the RBI's image is of paramount importance.
Now, I will have to press you on the current account deficit.
By our standards, not that alarming. We've seen much higher before, and we've come out of that reasonably well, thank you. So yes, 3% is high. Anything above 2.5%, and I am concerned. But it isn't remarkably high, right? Especially given the turmoil that we are seeing. So I wouldn't get overly worked up about it. I think what would be of much greater concern is domestic inflation. And now, in controlling domestic inflation, even if the RBI does not target the exchange rate or the foreign exchange, the current account deficit, it will have the effect of correcting that problem as well. We shouldn't do anything which is too draconian. I think it's better to live with a little elevated inflation for a longer while than to try and correct the inflationary pressures in a very short period of time, because the latter can be extremely disruptive and can really throw the growth process completely off the rails.
Thank you, Mr. Sen. So there you have it. It is way past time that the RBI expeditiously address doubts about its responsiveness.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.